Welcome to another edition of Zacks Ranked By. I am Brian Boland, and I'm the aggressive growth stock strategist here at Zacks, and I got two more stocks for your aggressive growth radar screen. So let's get right to it. The first one I got is SOVO Brands. SOVO Brands. SOVO is the ticker. It's a Zacks ranked number one strong buy, which just about all of our Zacks ranked videos are. And it's got that growth divergence that I love to see, a very strong growth style score and a very weak value score, style score for value. All right, we look at the chart right here, looking good. I like to see that. And we're going to report later on in March, so you got plenty of time. $2 billion, call that mid, smid, I don't know. I just did a video on market caps, so now I'm a little focused on market caps for some reason. We're in the natural foods business, natural foods products. That's what Sovos is. Let's take a look at the numbers we used to look, because most of investing is the numbers game. We're beating the number here, and we're beating it handily. These are 2, 3, 4 cent beats. So I see the number of the level of beat on an absolute basis getting bigger, and the percentage is doing pretty good. So 20%. So you're beating the number handily. We like to see that. What are your estimates doing? Well, we're holding still at 20 cents for this quarter. For next quarter, we kicked up a penny to 21 cents, 73 to 74 cents. For this year, at 84 cents to 85 cents. Slow and steady will win you that race, said the tortoise. But are you growing? That's the key thing here. At 13% top line this year, 10.5% next year, going over $1 billion to $1.1 billion. Good to see. How are we doing on the valuation end of things? Well, we've got a 26 times forward earnings multiple, so not your nifty 50. But if we look at the top line growth for the most recent quarter, 23%, it's right there. It's right in line. Value investors want to see the price to book multiple under 3. They don't get it because we're doing growth. We like growth. 2.26 times sales. That tells you that market values their sales growth. We see margins have moved up there. Net margins, I don't like to see that, but, there can be financial engineering going on there. I take a look at the chart. Kind of a relatively new company, so it missed out on the pandemic dip. Comes in here. There's the tech destruction of 2022. This stock IPO is 21, and it just beats. It's all it knows how to do. But here's the key. The key takeaway in this graph is we look at these earnings lines. It's this line, and then this line, and then starting here in that line, and then top there. The big growth difference, especially starting about here, big time difference in the earnings. There's going to be good earnings growth. Even though this number has tailed off, that's 2022, it doesn't really even matter anymore, because that was a long time ago, at least in my book. All right, so let's keep that one in our aggressive growth stock screener. It's Sovos Brands, SOVO. All right, on to the next one. Here we go, and it's Vertiv, VRT. 3-letter ticker. I don't usually see that because, I'm in that small cap land for the most part, but it's a Zacks ranked number one strong buy. A for growth, D for value. Look at that chart. Love it. Love to see it. 21 billion. So definitely mid cap here. Bigger than your $2-3 billion names. Won't report earnings until the end of February. Got lots of time. And this is in computer IT services. And I do believe this is one of these data center names. So data centers, super hot. Have been for a long time, but continue to be slow, solid, steady business. So we like to see, all right, what's going on with the numbers? We got a miss. Don't like to see it, but I'll handle it here because we got it's followed up by big beat, a bigger beat, and another good sized beat. We got our absolute numbers trending much higher. So on a dollar sell wise movement, we're looking good there. All right, 53 cents holding steady, 32 to 36. That moves up $1.74, but that was last year, and it's holding steady. 221 to 222, little tick up there for that, but good implied earnings growth rate. Well, it's 28% for next year. All right, so top line. Last year, they grew at about 21%. That's great. We see a big deceleration down just to 10%. but I got a feeling like we could get some guidance here that could tell us things are moving up because data centers are hot, as they always have been. AI needs lots of data, and that's a big topic these days. All right, what are you paying for the stock? 24 times, and that's just a little bit over their 17% top-line growth. Price to book, 12 times price to book. So that's 12 times all the assets on the books. You got to think of this as an asset slim idea because I think they're the software that runs behind and manages the data center. So 3.5 times sales, good to see. Margins ticking up 50 basis points at a time. Like to see that, nearly 50 basis points. That margin's moving up as well. Let's take a look at the chart and put this one in the can, shouldn't we? Shall we? All right, so nothing. This looks like this could have been a SPAC or something like that. Come down after the SPAC, and then we say, oh, no, wait a minute, this is a real business. Even after this pandemic, we're going to die. And then we're not going to die. And here we have the tech recession of 22. But you dipped down from your highs of 25, and then you held steady. And then it's been off to the races. I mean, last year, we just figured out last year that data centers are super important. So the key here as we look at these ideas again, you don't have a lot of big spacing. But if you think about the spacing from where the line starts to where the line ends, good, consistent earnings growth. If I look at that one, it's not quite as big, but the trajectory is in the right direction. All right, so that's Vertiv, and that one is on your list of aggressive growth stocks. All right, be sure to join me next week when I look at 2 more stocks for your aggressive growth radar screen. And until then, why don't you go to Zacks.com/promo to check out all of our latest promotions.